Hey there, everybody. It's Greg Gossett from Gossett Trading and Mentoring Live. And today is Wednesday, June 19th, 2019. We are now in the last hour of the market, or like I like to call it, the lie detector of the market, because the truth of the prices tend to come out in the last hour of the market. I think they're the most valid prices, and that's why I prefer to make the majority of my buying and selling decision based upon the closing price of the day, as close as possible to the closing price of the day. I know sometimes that's not possible, but do your best. Try to get the closest price to where that baby closes. So, all right, well, we had the Fed minutes come out today. We were all waiting for that. It was a little, I guess it was a little bit overstated in the fact that really wasn't that much volatility. I've seen these situations where it goes skyrocketing up and then it just goes screaming back down, and then sometimes it goes skyrocketing back up. So you never quite know. I basically went flat yesterday. I just wanted to be conservative. I wanted to set a good example for everyone that it's not a great idea to hold positions in front of large news events. So anyway, yeah, the market's up a little bit. Not anything huge. I mean, it is up 70 points. The Dow's up 70 points. The Nasdaq's up 15, and the S&P is up 8. So not too volatile, not too crazy. So we'll have to see. Go through the list and see if there's anything that we want to buy today. So how's everybody doing out there? Let's see. David's here. Hey David, I'm doing well. How are you? Andy, now we can take a fresh look at things. That's exactly right. Mount Doji, yo, what's happening, my friend? Good to see you. Thanks for stopping by. All right, so the plan for today, as usual, is first of all, we're going to go ahead and run the legal disclaimer. Then we're going to go through my current positions, the one that I still have left. I only have a couple of them left after yesterday's purge before the Fed announcement. So we'll go through there, see what's happening there. Then we're going to go through my watch list. We're going to take a look at each stock. We're going to take a look at some support and resistance levels, some moving averages, seeing if there's a potential trade for us to get into today at the close of the market. And then after the market closes, if you have any questions, if you're not clear on something that I said, or if you'd like me to take a look at a particular stock you're interested in, I'm certainly happy to give you my humble opinion. So, all right, so step one is let's go ahead and do the legal disclaimer, get that out of the way, and I'll be back in about 40 seconds. So hang tight, please.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okay, we got that out of the way. Let's just go ahead and look at my current positions, the one that I kept from yesterday, and see what's going on with those. All right. So this has been a long trade we've had. I'm not complaining because it's gone up. It's been a long trade. This is the DDM. This is the double leverage Dow. I got into this back on the 6th of June when we closed back above the 200-day moving average. So, it's a good back-tested approach to stay out of the DDM. DDM is the double leverage Dow. To stay out of the DDM under the 200 and to get in the DDM when it's closes above the 200 and stay in it until it closes back below. So this is a discretionary trade, meaning that I enter the position based upon my signal, the close over the 200 day, and then because this is a strictly mechanical system, I'm going to stay in this until one, I either phase out of all my positions to the upside, or two, I phase it closes back below the 200, which was my entry. And you can see this has moved up nicely since we've bought it. Took some profit targets here, then we had some chop, had 3 profit targets yesterday. You can see got close to that profit target today, but not quite. Maybe by the end of the day we'll take it out. Not sure. So let's hope. But at this point, I am out of about 80% of this position in the DDM. So, so going forward, if it closes under the 200, gonna get out with the positions I have left, or if it keeps moving up, I'll continue to phase out until it takes me out of all my positions. All right, the Qs. So I did get into the Qs back on the 4th of June. And why did I get into it? Well, I based this off the 250-day moving average, because this is another good, quantified, profitable, back-tested, long-term trend trading approach to the Qs. When you stay in the Qs over the 250-day, and you stay in it until it closes back under the 250-day. That's the basic approach. Now, I add my own kind of approach to it, where I do that because this is a totally mechanical trade, but I also phase out as it moves my way. So you can see this has been a great trade. We phased out, phased out, phased out. We moved sidewards. Yesterday we hit 3 profit targets, and today we just barely got the top on one of my profit targets by a couple cents. So we did get out there. So, you know, I'm reducing my position size more and more and more as it goes up. So I think I only have 3 profit targets left, and I'll be completely out of this trade. But, you know, this has been a pretty good trade. I mean, from here to here so far, 6.74% on an index, no less. So that's been a really, really good trade. SPY. So as many of you know, and I'm sure you're probably tired of hearing this, but in case we have some new viewers, I do want to let them know why I did enter this trade. I do buy the SPY, the S&P 500 ETF SPY. I do buy it every day at the close of the market, and then I sell it the next day at the open. And so why would I do such a crazy thing? Well, it's based upon this back test from 1993 from @BespokeInvest on Twitter. So since 1993, if you would have bought the SPY on the open in the morning, sold it on the close in the afternoon each day, you would have actually returned a negative 5.2%. But if you did the opposite and you bought it on the close in the afternoon and you sold it on the open the next morning, you'd have actually returned 568%, meaning that more than all performance from the market since 1993 has come in after hours trading. That's the people bidding up the price in the aftermarket, bidding up the price in the pre-market, and selling it into the open. And that is why you have such a disparity, because all the returns have actually come in after hours trading. I mean, isn't that amazing? You know, which, you know, if you're a day trader, you know, let me point out that if you're a day trader, you're buying someplace between the open and the close. So you need movement for that to happen, right? But as you can see from the actual results here, all of the gains have come in the after hours. So if you're relying on trading intraday, there's really not that much movement, as you can see, right? So this was based to 2017. The new numbers for January of 19, buy at the open, sell at the close, actually a negative 13.9%. Buy at the close, sell at the open, actually 634% as of January 2019. And then Stephen Burns, famous author and trader and somebody that you should follow on Twitter, by the way, at S Joseph Burns. Just a wealth of great information. You know, I heard somebody post on there that I've learned more from Steve's post than I have from going to like 3 trading seminars, and I believe it. But anyway, sorry, off the subject. But he did this, I think, about a week ago, and the returns to date in June of 2019 were actually 712.63%. That's the buying on the close and selling on the open. So that is a long way of explaining why that I buy at the close every day and I sell it at the open. So yesterday I did buy it at 292.12, sold it today at 292.40. So another little gain, right? Not a lot, but they add up. So I will be buying this again today at the end of the market. And that is all we have. Usually we have a lot of stocks to go through, but today, not that many. I'll tell you what, I am glad that I did go ahead and get out of my position yesterday, because I owned 5's down almost 2% today. So I'm thrilled to see that down today. It totally, you know, it was really tough for me yesterday to make that decision to go flat. But like I said, I wanted to set a good example. We've had such a strong June. I didn't want to give it back by, you know, kind of gambling on some news. You know, the news was actually that the Fed, they didn't cut interest rates. Some people were expecting they were going to cut interest rates. They actually said that they don't have any plans for a rate cut in 2019, but you know, they're going to be aware and watch everything. So I think implicitly they're kind of, you know, leaving the door open. So you can see the market, you know, is reacting positively to it. 67 points on the Dow. So nothing huge. I was really expecting something huge, but anyway, you know, I was really questioning myself last night. Boy, did I do the right thing? Did I not do the right thing? And you know, I ended up with the final thought of, yeah, I did the right thing. You know, it set a good example. It's not a good idea to gamble in front of earnings. Not a good idea to gamble in front of big news. I mean, sometimes it works out, sometimes it doesn't, but you never really know what the market's already priced in. You just don't know. So those of you that held through, awesome. I'm really glad it worked out. But for me, I'm actually glad I got out, just because just the 5 position alone made it worth it. So, and actually Ford's down 3 cents too, and I got out of that yesterday as well. So, all right. Dr. Jorgensen, Trumpy will have a temper tantrum, no rate cut. Yeah, I know, huh? Barely a cup of coffee from SPY today. Yeah, well, at least you have a cup of coffee, though, right? At least it was positive. SYH, hey, how's it going? SYH says the most important index for Fed is wage growth. There is no movement in wage growth. That's why FFR remains the same. Yep, federal funds rate. Yep, so, you know, trying to figure out the Fed and what they're going to do and whether it's priced in and baked in is very, very difficult. So, you know, my advice is not to try to figure out these huge macro things yourself, and, you know, really let the prices at the end of the day dictate. Hey, Ben, how you doing? Please explain what's going on. Ben, what do you mean specifically? What's going on? You're clueless. I'm clueless about anything. Well, I am going to try to do that today. Basically, I'm going to go through the charts today and explain, you know, support and resistance levels, you know, why we're buying things, why we're selling things, and just kind of try to break it down technically. So if you have any questions when I'm done, Ben, just, you know, please let me know, okay? All right. Hey, before we get to the charts, I did want to point this out. This is from Paul Tudor Jones. I know a lot of you are familiar with Paul Tudor Jones from the Market Wizards books, but I always try to post something here from a famous trader, some good advice. But essentially, don't be a hero. Don't have an ego. Always question yourself and your ability. Don't ever feel that you are very good. The second that you do, you are dead. And again, it's true. If you have an ego and think you're becoming like this really great trader, the market is going to teach you otherwise. I mean, whenever I get cocky trading, I'm telling you, I'm near a top in my account. So I always try to be humble. I always try to, think, what am I doing wrong? There's a lot of things I don't know. There's a lot of things you don't know. So, one of the results of being cocky is having too large position sizes and not getting out of your positions, not adhering to your rules because you're getting cocky. So please don't get cocky. Please don't think you're a good trader, that you've got this figured out. It's kind of like golf. You never really quite have golf figured out. And, trading is the same way. Just always be humble, always be scared. I'm always scared of the market, right? Because I respect the market. And if I'm scared of the market, then I'm going to position size correctly. I'm going to get out quickly if I'm wrong. And so, Paul Tudor Jones is certainly one of the best. So I'll just read it one more time. Don't be a hero. Don't have an ego. Always question yourself and your ability. Don't ever feel that you are good. The second that you do, you are dead. So, anyway, I wanted to show that. I wanted to share that with you. Hey, Frederick's here. How you doing? Good to see you, my friend. Mount Donji says Paul's chapter is great in Market Wizards, isn't it? It's really, really good. If you guys haven't read Market Wizards, I would really suggest it. Bruce says the Feds had a meeting regarding interest rates, and they were considering lowering the rates, but decided to keep it steady. Yep, that's right. Going to be interesting to see how we close today. I wouldn't be surprised at all if we had a big move at the end, but so far today it's been pretty mellow, so that's good. All right, well, let's go through and take a look and have a fresh look at the market here and see if there's anything that we want to do. All right. All right, so Apple. Apple did have a nice 1050 EMA cross back on the 14th of June. The 1050 EMA cross is a good back-tested approach for trading Apple. I did not take this trade. I took the trade on Amazon instead because it had another signal. Let me see exactly which day this closed. Sometimes you can't really tell unless you go one by one. So 190.43. Yeah, okay. So it did cross on this day. So it is up. It is actually down today. It was right here in the third ATR channel when the signal said to go long, and about 90% of all price action when it gets to the third ATR channel will run out of gas. Not all the time, but a lot of the time that happens. So I decided not to take this trade because it was at the third ATR channel. It did move up nice, strongly yesterday. Today it has come back down a little bit. So it's at a 63 RSI. I don't think I would enter this here. I really don't like entering anything over about a 61, 62 RSI maybe. But the fact that it's now, at the third ATR channel, around the third ATR channel and a high RSI, it gives me pause. So I'm not going to do anything with Apple today. Advanced Micro Devices. We had this nice move up. We've come down It did trigger a V2 yesterday, but I didn't like the setup because I'd like to see this move up, move down, back into the value zone in between the ATR lines, the green lines, move sidewards for a while, and then have a V1 or a V2 entry. This just went straight up, straight down, and then went right back up. So this one concerns me a little. I'm going to let this one go. Nothing on AMD. All right, Amazon. I did buy Amazon here based upon the 550 simple moving average crossover, and that back test well. So I did buy it there on the 14th. You can see it did move up nicely the next couple days. I did get out of it yesterday, one because of the Fed meeting, and two because we had this kangaroo tail where it opens in the bottom, goes up, and then closes right back down at the very bottom. Plus, we almost tagged the third ATR channel. So I decided just to go ahead. One, from a technical standpoint, I did get in it based upon the moving average crossover system, but it's not a mechanical trade for me, meaning I'm just going to hold it until this goes back. So I enter mechanically, but then I get out discretionarily. And because of the Fed meeting and because of the rejection and the kangaroo tail there, I decided to get out. Is up today, so that's good. So any of you are holding that, I hope that thing keeps motoring up for you. All right, so Boeing had the big strong day yesterday over the 200 day and got right to the third ATR channel. And if you remember, I didn't want to buy it here today because if I would have, bought a gentle close above the 200, this is about where I would have been targeting to get out of my trade. So I'm not going to get into a trade when it's basically where I was going to get out of it. So if you remember, what I was saying is I'd like to see this backfill, right, come back into the range of yesterday's bar. Ideally about halfway would be the best. I'd like to get it under a 60 RSI close. So I will mark this one as a possibility because if I enter here today, I'm going to enter a better price than I would have entered. I do like this movement long term. I think long term this does show an upward bias, but when I say long term, maybe I mean a week or two, but from a day-to-day trading perspective, I was kind of anticipating that this would happen, that we'd have a move back down. People that had made money on this big move here would take a little bit of profit here, and that would drive it down. You can see the volume yesterday was heavy. So, this is a good example. When you have a big up day that's heavy and then you have a down day where the volume is lighter, that's a positive sign because the strong move up shows lots of people buying. The move down shows a little bit of just profit taking, right? The majority of people are keeping their position. So that's how I view this. If I saw this move back down on huge volume again, that would show me that people are distributing the stock. But when you have a nice move up on big volume and then you have a pullback on low volume, in my opinion, that's bullish because that's just a few people selling for their profit and it's not showing up in the volume. The thing about volume, everything shows up in volume. There's no place to hide. So, I like to look at volume and see what kind of response what the bars are doing up here are showing with their volume here. So, we're not at the end of the day, so this volume is going to be higher towards the end, but let's keep an eye on BA as a possibility for the end of the day. So let me quickly do my numbers here on this one. All right, it's above the 200, so it would be a full position. It'd be a 10% position size for me. All right. Alibaba. So we did have that nice big strong move up above the 200 day, and we had it on high volume. Similar to Boeing, everybody. it it is about halfway of this bar. The volume on the way down has not been as high as the day up. So this will also be a possibility for me today because, we're getting it, well, a little bit better than yesterday's price, but I would have actually bought this yesterday, but because of the Fed meeting. So MACD is positive. We're above 50 RSI. The only thing that concerns me is that we did tag the third ATR channel and we did tag the 250-day twice now, and it's rejected it. So, but anyway, let's take a look. Keep it in mind, tag it, and take a look at it at the end of the day and make a final decision. Frederick says, I'm good, thanks. I do not trade at the moment. Too much things happening. All right. Yeah. It's important. It's a good point, Frederick. I mean, you don't want to trade if you have too many things going on. You want to be able to focus on what's happening because things can get away from you. You can make mistakes. Lord knows I've made mistakes. I'll have to tell you guys some stories about some mistakes I've made trading. And I was concentrating and focusing too. But, I gave you an example. I won't go into it, but I wanted to sell one contract of the yen. Ended up selling 100 contracts of futures, by the way, because of a cache situation in my computer. Unbelievable. So be very careful, not only how you pick your stocks and your entries and all that stuff. Get very careful just from the logistical standpoint of entering in your numbers. Make sure you're buying 300 shares and not 3,000. You hit that extra zero. It's easy to do. All right. So canopy growth. Canopy growth doesn't look too bad. Higher low if it closed above the 200, but unfortunately we have earnings. So I'm going to have to just let that one go because that's my rule. Cisco. It's up a little today. Nothing too exciting. So nothing there. The Dow, I already had the DDM, which is the double leverage Dow. So that one's looking fine. I'm not going to initiate the new position here though at 66 RSI and close to the fourth ATR channel. Closing above the third ATR channel is bullish. I can tell you that it is bullish, but you're kind of getting up into rarefied air up there. Another volume example is, do you see how yesterday we moved up on this strong volume? So if we move up today again, like we are now, but it's on low volume, that is bearish. You want to see volume continue as it's moving higher. If it keeps moving up but not on a lot of volume, that means there's fewer people buying. There are people that are buying at higher prices. That's what's drying it up, but there's not there's not a lot of people buying it across the board. It's just a few people. And in my opinion, those people are probably not as sophisticated as the traders. But, I could be wrong on that, but that's my feeling. All right, Disney. Disney, we had that big reversal bar on some big volume. We did buy Disney back here just to give you an example of some previous trades, but here's a nice V2. Here's day one. Day two washes out day one. Day three closes above day one's close. So you had a nice V2. You also rejected the first ATR channel and then closed back up. That is also positive. And also, what really caught my eye on Disney was the whole month of May was straight down, if you guys remember, right? Disney, however, just moved sideways. It wasn't going up. I mean, it moved a little down, but compared to the rest of the market, it was very strong moving sidewards. So that's, it showed a lot of relative strength. So, the reason I started tracking Disney was, look, it has good relative strength. If I do get a signal, I'm going to take it because if the market does go, it should go strongly because it was so strong in the downtrend. So I did buy it here on the 3rd based upon this V2 rejection of the channel, and you can see it moved up nicely. I got out right about here. I was waiting for a pullback, and the pullback did come, but I didn't give me an entry signal, so I didn't get in on this second leg. But anyway, nothing today. Etsy. Well, Etsy had this nice, big, strong move up. I'm waiting for a pullback into the value zone. Remember, when you have nice, big up moves, you want to buy that. Usually the first dip's the best. And when I mean dip, I mean a move after the uptrend like this, a move back into the value zone, and then look for some kind of V1 or V2 entry to trigger you back into the trade. So it didn't quite get low enough for me. So nothing on Etsy right now. Ford. I did buy Ford here and here. This broke out over this previous fractal here. A fractal is a high with 2 lower highs to the left, 2 lower highs to the right. I only bought a half a position right here because of this big bar. I thought we might go a little lower the next day where I can add my second position. And it's exactly what I did. But I ended up getting in right, I think at an average price of $10. And then I did phase out in the next couple days. And then I exited the trade because of the Fed meeting. And so far it was a good idea, down 3 cents today. So I am flat. Ford, you know, am I going to exit it back? Am I going to re-enter it back here? I don't think so. I don't think I'm going to. All right, Facebook. Well, Facebook's had a nice strong move back up, had this nice bounce off of the 200. But at this point, you know, yesterday we had big strong day, reverse back down. Today we are down a little bit. You know, here's a move. I'd like to see a move back into the value zone, looking for some kind of bounce to buy, but right now it's not quite there yet. 5 below, I did get out of that yesterday. This didn't turn out well, actually, yeah, I did make a profit on this, but it didn't really move the way I thought. But it is a great example of a perfect V2 situation squeeze play. So for this kind of pattern to be valid, you need to make a higher high like we did here. We want it to come back into the value zone, right? See how we moved down pretty strongly, but then we started to move sideways. That's what you want to see. You want to see not that there's not any more supply coming into the market, that it's keeping from going down, that it's stabilizing. So step one, you have to have a nice higher high move. You have to have a move back into the value zone between the green ATR channels. You need to move sideways at least a couple days. Then you need to spike down, test this area down here, and then reverse back up. And that's exactly what it did. It reversed back up. I was looking for a V1 trigger. This did not close above the previous week's close, so it did not confirm as a valid trigger. But if the V1 doesn't confirm, then a V2 is valid. So the next day, do you see how this then closed back above the previous bars one close? So that is a good signal. I did take it. I actually took it intra week. I took it right about here. Did move up nicely, but then yesterday it came back down. I still did exit the trade for a profit, but because of the Fed meeting, I decided just to go ahead and clear the decks and get out, and so I'm glad that I did. So am I interested in this moving forward now? You know, I think I'm going to look for a V1 or V2 entry to get me back triggered into this. So at this point, no. And I definitely don't like that it's down on a down day either. Gold is actually up pretty strong today. There's nothing for me to buy there. It's a 73 RSI, but it's a good example of a previous trade that we took where, you know, here we have a higher low. Here we have a fractal. Here's a high with 2 lower highs to the left, 2 lower highs to the right. And we had a 520 crossover. So we had a lot of signals line up. We took out the fractal. We had a higher low going into the fractal. We had a 520 cross. MACD was positive. Volume had picked up. And so we did enter it here, and we wrote it and phased out all the way to about here. So that was a great trade. It's a good example of, a technical chart showing lots of different technical indicators coming together at one time. Fractal, higher low, MACD's positive, RSI's above 50, took out the 50-day moving average as well. The trade was in the channels. You had the 520 EMA cross. So it's a great example of a great trade of letting lots of things line up, and that's what you want to do. You don't want to just usually have one signal. You want to have a multiplicity of signals. Google is down today, so in order for me to get interested in Google, at the very least here, I'd have to have a close back above the 200-day. So nothing right here right now on Google. Goldman Sachs, big up day yesterday. Still under the 200-day moving average, so not really anything I'd be interested in at the moment. IBB, there is nothing today, but I did buy IBB back on the 17th of June. And why did I buy it? Well, kind of like I was talking about on gold, you want to look for a multiplicity of signals, and the signals where, one, we took out this previous range, we took out this previous fractal high with 2 lower highs to the left, 2 lower highs to the right. We actually took out that range as well. MACD was positive, happened on really strong volume, and in addition, we had the 530 EMA cross. We had the 5 EMA cross over the 30-day on a closing basis. And that is another good back-tested approach. So, putting it all together, you take out a fractal, you have the 530 crossover, you closed above the 50, MACD was positive, RSI was not at a high reading, it was still at a neutral reading. So I did buy it here. I was concerned that this bar was a little big, so I did not take my full position. It was under the 200-day, so actually when it's under the 200-day, I'm going to take a half position. But because this big strong move, I only took a quarter position because kind of like on Boeing, we were looking for it to come back in to add my second position, but it didn't do that. But the reason I at least bought a quarter position was in case it did this very thing. If I said no, I'm going to wait, but if it took off without me, then that would be kind of sad, right? If it moved up without you. So I was happy with the trade, even though I only had a quarter position because it still moved out. It did hit the third ATR channel, and it was before the Fed meeting, so I decided just to go and lock in that loss. I think it was like a 1.3% gain, but overnight, not bad. So would I be interested here now? I don't think so. I don't think I'm going to rebuy it back at these levels. You're up against the third ATR channel. You're up against the 100. You're up against the 200. It could keep motoring on up, but I'm not. I'm just going to let this one go until I can get a more favorable risk to reward ratio. Intel. Well, what do you know? We hit that third ATR channel and came right back off, didn't we? This is a tough situation with the market here where you have relatively low RSI readings, but you have the third ATR channel above you. It's kind of a tough one. I like buying the lows better, not up to the third ATR channel. We did buy Intel back here on the 29th of May because the previous day we went under the 30 RSI, we went under the third ATR channel. The next day we closed over the 30, we closed over the third ATR channel, and that was my entry there. It went up a little bit, then down a couple days, and then it ran into its nice move, and we phased out of that trade right up about here. We faced all the way out up about here. So would I be interested here? Probably not. I just got to tell you, I'm concerned about the 100 and the third, or the 200 and the third ATR channel. So, you know, unless it makes sense to you, unless it's part of your plan, you know, not just your entry points, but, you know, your profit targets above are, you know, I can say, hey, I'm going to get out here at my profit target, but there's a lot of resistance. There's a lot of moving averages above me. I look at these moving averages as people going to sell, right? To the downside, I look at moving averages as people, buyers waiting down there. Here, I look at sellers waiting here, here, and here. So, you know, make sure your setup is correct, but always keep in mind, how much room do I have to my upside? And is it a legitimate upside? Do I really feel like it's going to get there? Or are there a lot of obstacles in my way? So, so nothing on Intel. Russell 2000, I was going to take this trade yesterday because it took out this fractal. It also closed above the 200-day, which was positive. I would have bought it, but again, the Fed meeting. So would I buy this today? And the answer is, I think so. I'll tell you what, though, I don't think I'm going to use the 100-day as my stop, because it's a downward sloping 100-day. Right now, the 100-day moving average is about halfway of this big bar up. So I am going to take this. I do like that it's only a 57 RSI. It does have some room to get to the third ATR channel still. And, you know, you can see the profit is from here to here, and my loss is just from about here to here. So the risk to reward does make more sense to me on IWM than the other indexes. So I am going to mark that. Coca-Cola, you know, had a nice move up. I'm looking for it to come back down in the value zone. I'm looking for a V1 or V2 entry. Lockheed Martin, nothing today. It's too high of an RSI. This is a good example of, you know, we were talking about, you know, coming up, making higher highs, coming back down into the value zone, and then having some kind of trigger, some kind of V1 or V2 trigger. And that's exactly what happened here, right? We went up, we came back, and we went down, we moved sideways, we had a V1 entry that triggered us into our trade, and we rode this all the way up to about here. So it's a great trade. So I haven't been in it since then, but nothing today. MasterCard does look interesting to me today. You know, we actually shorted it up here because we went above the 70 RSI, we went above the third ATR channel. The next day we closed below, and that was my signal to short. And I don't do a lot of shorts, but this one worked out, and you can see it moved down immediately. And then yesterday we covered our short down here. Now to the upside, you know, what I've been talking about, we make a higher high, we come back down, we move sideways for a little bit, we come into the value zone. Yesterday we spiked down, and today we've reversed, and we have triggered a V1, right? So let me mark this here. Here's day one. Day two takes out day one. As long as day three closes above day one, then it's a valid V2. So if it does close above 259.20, I will be entering this today, and it's a full position because it's over the 200-day. But again, nice move up, down, starts to move sideways, spikes down, reverses. So right now, this definitely looks legitimate. In a strange way, it's nice because we made money on the downside. Now maybe time to make some money on the upside. We'll see. 3M had a big strong day yesterday. Did go higher today and then has gone back. You know, I could be talked into buying this just because we had this big strong day and now we're coming back down. I'm going to give it one more day, see if we can get a little closer to that halfway point. But, you know, it did move up strong on big volume today. It's moved back. I'd like to see if I can get it a little bit deeper down here. Because I have other positions, you know, that I'm going to be looking at buying. Merck, woo, big strong day. Microsoft is up a little today. Nothing there. Netflix had that big strong bounce off the 200. Nothing there. You know, I was going to take Nike yesterday when we closed above the 50-day moving average and we closed above that previous fractal. Looks like it was a good idea that I did not. So nothing on Nike today. Philip Morris. You know, I did buy Philip Morris here because the previous day we were under the 30 under the 30 RSI, under the 30 ATR channel. Next day it closed above the 30 ATR channel and above the 30 RSI. So that was my exit. Next day it went against us. Next day it went for us. Back to break even, and then the next couple days it just moved sideways and didn't do anything. So I just went ahead and got out of the trade. So it looks like it was a good idea that I did, but nothing there. PayPal, nothing on PayPal. The Qs we have, again, we bought it back here when it closed back above the 200. We've been phasing out. We did hit one profit target today. Silver strong again. Interesting. Closed back above the 200, but again, you can see the third ATR channel and the 100-day right above us, so that does concern me. The SPY, we'll be buying that at the end of the day. Square, you know, it's a 63. It's right up against the third ATR channel and the 200, so nothing there. AT&T, nothing there. Tesla, nothing there. Ooh, I got out of natural gas yesterday. I entered it here on the 14th because the previous day we went under the third ATR channel, under the 30 RSI. We closed back above them both the next day. Next day I held it because it held halfway of this bar, but I did have to let it go yesterday and took a loss on that trade. But it's a good thing that I got out of that trade, right? Because it's down 1.8% today. You know, tomorrow if it goes under the 30 and then back over the 30, under the ATR channel, back over the ATR channel, I may take a look at it again, but nothing today. Oil is up again today. This was another trade that I took with the under 30, under the 30 ATR channel, back over. I did buy it here and moved up, and then it took out the previous day's low. So I took a very small loss on it. I got out here, and then it went right the direction I wanted it to the next day, but I wasn't in it, but that's okay. Visa, you know, it's similar to MasterCard where you have this move up, sideways, spike down, and reverse. But the reason I like MasterCard better is because it's in the it's within the value zone. It's within the 1 and -1 ATR channel. And you can see Visa, see how it happened, but it happened above. So I like MasterCard better because I want to buy it closer to value, not above value. VIX moving down today. It's at a 37 RSI, so nothing there. Verizon. Well, You know, here's a good example of, again, of a nice fractal that happens within the ATR channel. Here the green, here the green. And it happened right here. We bought Verizon right here because it took out that channel. And the next 2 days, boom, boom, moved our way. So that was a great trade. So, but I want to point out when you have these fractals that trigger within the value zone, because as soon as you start getting above the value zone, you start running out of gas near here to the upside. You start running out of sellers down here. So, you know, to have the best chance of a good move is buying in the value zone and then selling into the 30 RSI. I'm sorry, the third ATR channel. So that's why I like buying within the value zone. We can't always do it, but you know, so today, you know, we do have well, it's not quite a V1. It's actually a V2 because yesterday's bar went below, and then today we're closing above day one's close. It's not bad, actually. It's not bad because we did make a higher high. Now we're in the value zone, right? We're at a 52 RSI, so it does kind of make sense. It does kind of make sense right there. Energy select, nothing there. Financials got sold into. Real estate, moving pretty strong. And healthcare. All right, so let's go ahead now and look at our potentials and see what we want to do. I'm going to pass on Boeing. I'm going to give it one more day. You know, I don't like that we went directly to that third ATR channel today and got rejected. I'm just going to let that one go. You know, there's better risk to rewards out here, in my opinion, than that one. So IWM does look good. I am going to use the 10-day moving or the 100-day moving average as my stop because it dovetails with the halfway point of this bar here. So I will add that. MasterCard, I do like MasterCard because of the V2 here, the move up, the move back into value, the sideways move, the stab down, the reversal back over. As long as it closes above 2 days ago's close, the 259.20. If it closes under, then I won't. 3M, I'm going to let that one go as well. Verizon. Let me take a look real quick and see. So that's the V2 line right there. So here days 1, day 2 we wash out day 1, day 3 we close back above. We are in the value zone. We're above 50. So, you know, risk to reward wise, this makes sense to me. In real estate, no. So full position on the Russell, full position on MasterCard and Verizon. So what do we have? 5 minutes here. All right, so I'm going to go ahead. So IWM.
Order partially filled. Order filled.
So I tried several accounts, so I have to do this a couple times here, so just give me a moment.
Order filled.
All right, so we have the IWM out of the way, the MasterCard. All right, I'm gonna watch those just to see, make sure they close where we want them to. So I'm gonna go ahead and buy my overnight SPY position.
Order filled.
Okay, we have our SPY.
Order partially filled.
293.32.
Order filled.
293.32. All right. 154.54 on the IWM. So that's our entry there. MasterCard's V2 looks good. And so that one's close. Let's see, that close was 57.63. Yeah, I do have it there. So that one may not trigger. If it closes under, I'm not taking it. MasterCard does look like it's gonna be good, so I'm gonna go ahead and enter MasterCard. For a full position.
Order partially filled. Order filled. Order partially filled.
Okay.
Order filled.
260.39. Alright, so we got our Russell there at 154. We got our MasterCard 260.39.
Order filled.
Got our SPY. That's not where we got our SPY. 293.29. Oh. 293.29. Yeah, that makes more sense. Alright, so we got our SPY. And then the only thing we have to look at is Verizon. And now it looks okay. What do we have? We have 1 minute. Alright, so better get to it. So Verizon. 610. Alright.
Order partially filled. Order filled. Order partially filled.
57.66.
Order filled.
Alright, So we've got everything. Let's see.
Order cancelled.
All right. Well, that was the market. That was the market. So, where did we end up then? So we only ended up 39.14. So we did sell off quite a bit there at the end of the day. You know, if we look at the Qs, or if we look at the S&P, if we look at that last minute, see that last minute, and look at the volume that came in. So it's not a great sign. It's not a great sign. And so we'll see what happens. Yeah, it definitely got sold into at the end of the day. All right. Hey, so if anyone has any questions, please type it into the chat, and I'll do my best to answer them for you and give you some clarity on something maybe that it's not clear. But before I do, I just want to put in my little plug and let you know that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. So, you know, if you feel like you could, like some one-on-one time with me going over your trading would help, please let me know. I know it will. I know I can help you regardless of, you know, if you're a beginner or advanced. I've been doing this a really long time, and I'm pretty good at it, and I think I'm a good teacher. And so you know, if that's of interest, please let me know. My email is in the description of this video, and my hourly rates are there as well. You know, one thing I do want to point out is that in my one-on-one teachings, I put you in the hot seat a lot. I ask a lot of questions. I make you explain stuff back to me. You know, in this live stream, I'm speaking all the time, but in the lessons, I make you teach me back what I've taught you. That way I really know that you know it. So anyway, if it's of interest, please let me know. I think it will be helpful for you. And then also, if you feel like that you're getting some value from this channel, if you feel like this channel is helpful, the live streams, you know, please do me a favor, hit the thumbs up button. It helps with the search results with Google, and you know, lets more people know about the channel. And I really do like to help people not lose money and to make money, but more importantly, not to lose money. So there's a lot of people out there that have that problem, that really struggle with trading, and if they could get to this channel, I think it would help them out. So hit the thumbs up button if you can, share it on social media, and you know, and help me build the channel. So all right, enough of that. Let's take a look and see if anybody has any questions. Let's see. Invisible Hand says, markets are about to close. Club's about to open. That's right. Dust off the dollar shooter and load it with one of the occasional 5. Frederick says, which crossover do you trade the most? Are we talking about moving average crossovers, Frederick, where one moving average crossover trades over another moving average crossover? Or are you talking about the price closing above a moving average? So there's prices just closing under or above, that's your entry signal, or a moving average crossover where one moving average crosses over another moving average crossover. So I assume you mean the moving average crossover. So, you know, I think probably one of the ones I use the most is the 520 EMA. Those are going to happen more often, right? Because they're smaller moving averages. So the frequency of these things crossing under and back over is going to happen more often than longer term moving averages crossing under or over. But I would say the 520 is the one that I use the most, and then probably the 1050 EMA would be the one that I use second most. Mount Doji says, Nike took a surprising turn. Yeah, it was good that we weren't in it. It was good that we weren't in it. But if we were in it, we would have had to get out, right? Because, you know, we went above. Our entry was the close back above the 100 and the 50 and the close back above the fractals. And then today it closed under. So, you know, it did save us. It did save us from getting in that trade, the Fed meeting. Frederick says, what is the green line and thick gray line on your chart? I am not sure. What is the green line? So Let me see if I can find a little cleaner chart maybe. There are two actual green lines on the chart, Frederick. This green line and this green line. These are the ATR channels, right? This is one standard deviation away from the 20-day moving average. So this green and this green are the ATR channels, the one ATR channel and the negative ATR channel. The thick gray line, if you're referring to this one, this is the 50-day simple moving average. And then this thick gray line, if you're talking about these gray lines, these are the third ATR channels. So this one and this one are the third ATR channels. This gray line here is the 50-day simple moving average. And the green line here and here are the one ATR channels. And then this line here, you might think that's green. It's actually kind of turquoise. That is the 5-day EMA. Thanks, Dr. Jorgensen. I will have a good hike. Thanks, buddy. Okay, moving average over moving average. Yeah. Yeah. So the 520 EMA and the 1050 EMA are the crossovers that I use the most. So let's see, where did we end up? Only 38 points on the Dow, 33 on the NASDAQ, and 8 on the SPY. So let me see, where did Apple ended down. Amazon ended up about $7. So, you know, so we didn't do too bad getting out of everything yesterday. Actually, it was a net gain, so I'm grateful for that. Mount Doji says, great to be back in the game today. Yep. Yeah, it wasn't too bad taking one day off, right? It wasn't too hard. It was kind of nice. I actually slept really well. Maybe I should do that more often. All right. So Frederick says, okay, the two gray lines are third ATR channels. That's right. So this one here are the third ATR channels. They're 3 standard deviations away from the mean, or the mean that I designate is the 20-day moving average. So, yes, this is the negative third ATR channel. This is the positive third ATR channel. Remember, about 90% of all prices stay within these channels. Now here's the two green lines are the 1 ATR and the negative 1 ATR. I really like to take trades in here, especially momentum trades or breakout trades in here, because you know it's not too hard for prices to go from here to the third ATR channel or from here down to the third ATR channel. But when you want to try to get under this bar, you're asking for a lot. And when you're trying to move higher than above the third ATR channel, you're asking for a lot. Andy says, are ATR channels typically 1 and 2 standard deviations from the 20-day? Well, I have 6 standard deviations. So the green lines, Andy, this is the negative 1. The other green line, that is the positive 1. That's 1 standard deviation away from the 20. And then the next line here, that's 2 standard deviations away, negative 2 standard deviations away. Then I have 3 standard deviations away to the upside and 3 standard deviations away to the downside. So you can set as many ATR channels and how many standard deviations that you want. But just to be clear, you know, I have a positive 1 ATR channel, a positive 2, a positive 3, 4, 5, and 6. And then I have a negative 1, negative 2, negative 3, 4, 5, and 6 ATR channels. Andy says, you answered it, but I guess you could use other moving averages. Yeah. So I hope that helps. But, you know, in the big picture, like I said, prices tend to stay between these channels. So when it gets closer to this channel, that's where I'm looking to exit. If I'm short and it gets down to this area, then I'm looking to exit. So I use the third ATR channels as places to look to exit and or not get in trades. I look the one ATR channel more for looking to take trades within here to exit here or to exit there. Now, of course, if you have a big dip buy, like we did, let's take a look. I think it was SSO. You know, I bought SSO here. And why? Because it went under the 30 RSI and closed back over. It went under the third ATR channel and closed back over. And remember, if it holds at this channel, you know, there's a decent likelihood that it's going to go the other way. So I use them for profit targets. I use them for places to exit as well. But they're extreme areas. I guess that's my point. Frederick says, thanks for your explanation, Greg. How do you set up your third ATR channel in your software? Well, let me see if I can show you specifically. So you see here, it says Keltner channels. I hope you can see this. I'm not sure if this is going to show, but each Keltner channel is my ATR channel, basically. So here's Keltner channel 1, Keltner channel 2. And bars used in average is 20, so I want to base it off the 20, and my factor is 1. That's the upper band. The lower band is based off the 20 and the 1. So when I add other Keltner channels on here, all I do is I change the factor. So here is the second ATR channel. See how I say 2 factor? That means 2 standard deviations. 2 standard deviations. And then I just add another set of upper and lower Keltner bands. And then I put in 3 for the lower and 3 for the upper. So if you know how to put in one set of ATR channels for, you know, 1 standard deviation, you just add a second one for 2 standard deviations. You add a second pair for 3 standard deviations. Does that make sense, Frederick? Yeah, it's always kind of tough setting up your charts, but you know, once you get familiar with the platform and you get your charts how you like them, it's kind of nice. It's just the figuring out the platform and how to enter stuff. That's always the tough part. Okay, you understand. Good. All right. Well, today turned out okay. It turned out slightly negative, which is okay, mainly because of the trades we took at the end of the day, and then it dumped right at the end, but you know, pretty close to break even. So going into tomorrow then, we have DDM, about 20% of that left. We have the Qs. Luckily we did hit one of those profit targets up here today, so we have a very small amount of the Qs left. We did enter our SPY here at the end of the day. We did add MasterCard because of this V2. So a close below halfway of this bar tomorrow, any close even down into here, I will get out. And then Verizon, based upon this making a higher high, coming down and creating this V1. So anyway, we're still pretty light actually, which is good with me. Hey, thanks, David. Cheers to you too, my friend. Appreciate you guys coming by. So thanks to David and Frederick and Andy and Mount Doji and Dr. Jorgensen. And who else did we have? We have Invisible Hand. Thank you for coming by. Ben, thank you for coming by. And SYH, thank you for coming by. I think that's the first time you've been here, so appreciate that. And Ben, oh, I did mention Ben. And Mount Doji, as always. And Andy, of course. So, all right, everybody. Well, I'm going to head up into the mountains, do my hike thing. I hope you have a good rest of your day, and go out, do something nice for somebody. You know, give them a wave or hold the door open or a smile. You know, you might make their day in a way that you don't know. And then that person might go on and maybe do the same thing. And, you know, maybe we'll make the world a little better place. God knows we know it. We need it. So anyway, thanks for coming by. Thanks for taking the time out of your day. And I hope to see you tomorrow during the last hour of the market. And if you have any questions that I didn't cover today, feel free to email me. Email's in the description, or you can send them, direct message me on Twitter as well. So, all right, but everyone have a good day. We'll talk to you later. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.